Why do countries trust the United States with their gold? And what happens when that trust breaks? The answer changed the global economy forever. Today we're diving into a conversation with Matthew Majinskis from the TFTC podcast, a financial analyst who's been tracking global monetary trends for over a decade and maintains one of the most comprehensive databases of worldwide currency metrics. We'll uncover why the post-World War II monetary system relied entirely on trust in America, how Bitcoin could create a new global financial system that doesn't require blind faith in any nation, and what governments might actually be planning behind closed doors. Before we continue, if you enjoy these breakdowns, hit the like and subscribe button for more TFTC content. Full episode linked below. In this first clip, Matty explains a crucial misconception about how governments view monetary systems, setting up our understanding of why Bitcoin might be more appealing to nations than you'd think.
People might tell you that it needs to be 100%. Definitely doesn't need to be 100%. And first of all, governments would never want it to be that way because there's literally no flexibility for them to do anything else, which again, I'm not saying it's good that they have it, but no government is ever going to go on to 100% gold standard or 100% Bitcoin standard. So that's the thing. That's the thing basically is we're talking now about going on to something that would be a new Bretton Woods. It's basically saying, well, we know that there's 21 million Bitcoin around the world. Are we going to have, like you said, Marty, 5% of the Bitcoin inside of the United States or 10 or whatever? I mean, obviously 10 would be a huge.
Here's a crucial concept that changes how we should think about government adoption of Bitcoin. Throughout history, no country has ever backed their currency 100% with gold or any other asset. They always want flexibility, room to maneuver during wars, crises, or economic downturns. This helps us understand why countries might actually be more open to Bitcoin than we think. They don't need to go all in. They can adopt it partially while maintaining some monetary control. What makes Bitcoin different from gold in this scenario is its transparency and immutable supply. Governments can't secretly manipulate it like they did with gold reserves. This fundamentally changes the trust dynamics that caused problems in previous global monetary systems. When we think about the current global landscape, with countries like Russia and China challenging dollar dominance, Bitcoin's properties become even more significant. It offers a neutral, verifiable system that could help stabilize international trade without requiring complete surrender of monetary sovereignty. This is particularly relevant as we see increasing tensions between major economic powers and a growing desire for alternatives to dollar dependence. But to understand why this matters, we need to look at how the last major monetary system was created. Matty takes us back to 1944, when the world tried to solve similar problems.
After World War II, or as World War II was ending across the world, it was in 1944. World War II, of course, ended in 1945, depending on where you were in the world. But the Bretton Woods Conference recognized the fact, and there was all these great economists like Milton Friedman and Hayek and Mises were there, and John Maynard Keynes was there. They all recognized that because of the madness that happened in Europe, all the gold, like 80% of the world's gold, we talked about, Bitcoin is now 2/3 of the world's monetary gold that is central bank gold. 80% of that gold was in the United States after World War II. So you had the situation where you had a democratic, safe country that just destroyed everybody else, was the dominant hegemon, except for, of course, the Soviet Union, which is this piece of shit entity that occupied Eastern Europe for 50 years. But anyway.
The Bretton Woods system emerged from a unique moment in history. After World War II, America held 80% of the world's monetary gold, an unprecedented concentration of wealth that made the U.S. dollar the center of global finance. Every other country basically had to trust that America would manage this responsibility well. It's similar to what's happening with Bitcoin now. Its market cap is approaching the value of central bank gold holdings, but with one crucial difference. Under Bretton Woods, countries had to blindly trust America's gold management. With Bitcoin, no trust is required. Everything is verifiable on the blockchain. This historical parallel reveals something profound about monetary systems. They tend to centralize power in ways that eventually lead to abuse. The U.S. position after World War II was unique, but it also created the conditions for the system's eventual collapse. The concentration of gold in American vaults wasn't just a technical detail. It reshaped global politics and economics for decades. As we watch Bitcoin's market cap grow, we're potentially witnessing a similar reshaping of global financial power, but with radically different rules. Next, we'll explore exactly how Bitcoin's verification system could prevent the same mistakes that doomed Bretton Woods. if you were to put forth the case of why it should happen, it's like, all right, let's take the harsh medicine now, stomach the volatility and the market chaos that is likely to ensue from this type of tectonic shift in how the global monetary system works and is viewed. But on the other side of that, if Bitcoin is at the core, you have a much sounder base because France doesn't have to trust that U.S. has the gold. They can put the Bitcoin in particular wallets and be able to verify that they're there. This is where Bitcoin's potential becomes clear. Under Bretton Woods, when countries like France wanted their gold back, they discovered that trust-based systems are fragile. The system collapsed because there was no way to verify if America actually had all the gold it claimed. Bitcoin solves this fundamental problem. Every country can independently verify their holdings without trusting anyone else. Yes, transitioning to a Bitcoin-based system would cause market volatility. We're talking about restructuring the global financial system. But the end result would be something unprecedented, a monetary system based on verification rather than trust. This shift from trust to verification represents a fundamental evolution in how nations could interact financially. The implications go beyond just monetary policy. It could reshape geopolitical relationships by removing one of the primary sources of international conflict, disputes over monetary trust and sovereignty. The technology exists now to create a system that's both sound and transparent, something that wasn't possible in 1944. Looking at current monetary trends helps us understand why this transition might be closer than many think. Maddie's next analysis reveals some striking patterns in global money supply that make the case for change even more compelling.
So here's what I wanted to show you so this is, again, I like to just draw trend lines. Longtime viewers, listeners of your show probably know that, and just measure the growth rate of those trend lines, right? Forget what CPI says. Just look at corporeal things, real things like the money supply, and measure. Now here's the monetary base. This is what you won't find anywhere else in the world. They kind of there's no APIs for this stuff. You got to manually go and calculate it. We are actually at the lower end of the band, right? Closer to the 2.5 percentile than we were during COVID, which we were at the top end of the band. But look at that R squared, 99% R squared, okay?
The data Maddie presents shows why we need a new monetary system in the first place. He's tracked how money supply grows over time, revealing a pattern that's remarkably consistent. A 99% R squared value means this isn't random noise. It's systematic expansion. This is exactly what happened under Bretton Woods. The U.S. printed more dollars than it had gold to back them. But Bitcoin's fixed supply means we can't repeat the same mistakes. For the first time in history, we have the technology to create a global monetary system that doesn't rely on trusting any single nation and can't be secretly manipulated. That's why governments are starting to take notice, and why Bitcoin might be the key to fixing what Bretton Woods couldn't. The implications of this data are profound. It shows that monetary expansion isn't just a policy choice, it's become a structural necessity in our current system. This helps explain why previous attempts at sound money failed. They didn't have the technological tools to resist the pressure to expand the money supply. Bitcoin's mathematical certainty and global verification capabilities make it uniquely suited to break this cycle. Will Bitcoin's role in rebuilding the global financial system make traditional central banks obsolete? Let me know in the comments. I read every single one, and if you found this breakdown of monetary history interesting, you'll want to watch our analysis of how AI and Bitcoin are democratizing access to technology. Click the video on your screen now. Don't forget to like and subscribe for more daily content. Thanks for watching. Stay humble, stack sats,